Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's March 10th. This will be our chart listing for the day. And I thought I'd start out by showing you the daily chart here. And notice that today was just an inside bar. This is today's bar, and we've actually started the overnight bar here for tomorrow. So it looks like so far it's an inside bar, but it's just another kind of indecision kind of day. Prices. The good thing is prices only closed down mildly from the close yesterday. We were trading way on down here, and we rallied back some of that before the end of the day. So maybe that's a good sign. There's still some buying coming in, um, and pushing prices, trying to push prices higher. We just can't really push above this. We haven't been able to really push above this support resistance line and maintain anything. We still closed below that today. We're trading below that right now. Of course, it's overnight session. Anything can happen by tomorrow. So maybe we'll push higher. We'll have to see. But it looks just like more of the same to me. The market's just up and down, range type action, and it can move. It can turn quickly and move quickly, and you got to be real careful trading that stuff. So just keep that in mind. But let's flip over to the intraday chart, the 2,000 tick chart, and we'll go through the trades. Well, let's go over to that other chart. Okay, here it is. Here's the big picture look at it. You can see we really made two legs down. We didn't quite, we missed getting two legs by maybe five or 6 points there, something like that. That's pretty close, and then we rallied out of there. So, and generally, if you don't make a target and you turn and go the other way, you're going to trade pretty strongly. And you can see we did that. And we closed up here very close to the highs of this move up right here. So a couple of things real quick. Today is rollover day. People always ask me about, hey, why are you still trading the March contract? Generally, I don't roll over until the volume rolls over, and that's going to be the following day. Rollover is always the second Thursday of the expiring month contract, so which is today for the March contract. And but generally, I won't roll over until Fridays, and rarely it might even be Monday, but generally by midday on Friday, most of the volume is rolled over, and you need to be trading the you'll need to be trading the June contract. So another thing with all the volatility, several people have asked me, why not go to a larger tick chart? You can go to a larger tick chart. Somebody actually sent me their chart today, and it was a 3,000 tick chart, and it looked pretty good. So there's no reason you can't do that. We used to actually try to do that, and we were flip-flopping back and forth, and people were getting confused. And I just like the 2,000 tick chart, so I continue to trade that. But there's nothing wrong with the kind of volatility we have now. Generally, what we want is we'd like for the bars to be similar to a 5-minute chart. We want a bar to last about 5 minutes. That gives you plenty of time to evaluate and think and make a decision. And I mean, the only problem is the market's been so fast. Waiting 5 minutes on a bar now might seem like eternity. But the idea is we want to make money. So if it helps you to make money, switch over to try 3,000, 2,500, 3,000, whatever. Just try it. And if that's what you want to do, I'm not telling you to do that because I'm not changing. I'm still trading the same chart. But somebody that doesn't have the experience and is learning, it might benefit you to switch over to 3,000. So there's no problem doing that if you want to. So just keep up with it. If the market starts to slow down, open up another 5-minute chart, try to find how many bars you got and try to get a tick chart. This gives you a similar number of bars. That's basically how we figure this out. So that's how I came to the 2,000 tick chart. At one time, it was about a 5-minute bar, 2,000 ticks. But it got to where it fluctuates up and down, and lately it's just, let's see how long a bar. Let's just look at a bar. We just pick one randomly. That bar lasted, that bar was at 12, 15, 42. This bar was at 12, 19, 08. So that's 3 minutes or so. 12, 19, 08. So that moved pretty quickly. 12, 21, 22. So you can see there, they're lasting to a couple of minutes. Some of them faster than others. But if you want to try to slow it down, try going to a 3,000 tick chart. Maybe it might even take a 3,500 chart to get to a 5-minute chart. I don't know. I haven't looked at it. But somebody did send me a 3,000 tick chart today, and it looks pretty nice. Definitely a lot smoother and a lot less chop and stuff. So that might be helpful to some of you. So don't be afraid to do that. Just because I'm not switching doesn't mean you can't switch. So, and I might open one up and just look at it just to, and look at both of them and just watch it for a little bit. And I mean, who knows? This volatility may be here forever. I'm going to zoom in here while I'm talking. We may not ever go back to the old markets. So this may not be right anymore for the average trader. We may 3,000 may be the sweet spot. 3,500 may be the sweet spot. But I'll play around with it and maybe give you my feedback on it. But just looking at his 3,000 tick chart, my feedback is the chart looked pretty good. And it definitely smoothed it out and slowed it down a little bit. And if that would help you, then don't be afraid to do it. So anyway, let's talk about the trades. You had to be patient this morning. 7 o'clock came just as we're rounding down here. Coming down, I don't see any. There's a failed second entry long here. I don't think it was quite 7 o'clock yet. Yeah, see, 7 o'clock didn't come to this bar. So you probably could have still traded that if you liked it. I don't like that failure. Notice you got a new high and you get a first entry and a second entry. But this should be back to the EMA, at least back to the trend line. And this is an engulfing bar. It's a huge bar, 31 ticks. If you traded on the engulfing portion, you got to go short right into the lows there. Just a lot of reasons not to like that trade. I didn't mark it. I don't like it. So, and then this blue area there was a news item up here that came out around 7:30. And you can see that huge bar, and it didn't last but just 7 or 8 minutes and 10 minutes at the most, and then it was over. And so just the part in the blue, you probably would have wanted to be flat before that. This stuff is generally nothing like the FOMC, and if it does create some excitement, kind of like it did here, it dies down real quickly. Probably much quicker than the FOMC stuff. So, but it's still something to be concerned about. So, you probably didn't want to trade during that. And of course, by the time we kind of got back to normal, we're just kind of chopping sideways. You can't trade this at all. There's nothing in there that you can trade. We do break out, pull back, and fail, and go higher again. I just don't see anything. And then finally, you get a first entry, second entry right here. Decent signal bar, and you could really call that a triple test. So I like going long there, and that was a quick, easy move. And that doesn't look like a very big move, but if you look at that, I mean, the other side of the range, that's almost 11 points. So that's a pretty good move. If you catch that move, and you easily get a runner right there, and you catch that move, you're in good shape. Same thing coming back. Notice that you got a new high. So this is a lower high, but prices also tried to go higher twice, and it's also a second entry short. So it's we're not really looking for failures, and that's why our second entries, because you can get chopped up. But we just came off the high, and the last couple of times prices tested the low, so you would expect prices to be going to the low. Somebody, I think, sent me this chart, and I think they went long right here, and they got out of this. There's enough movement. But I don't like that trade. You should be looking for a short, if anything. So when you got the second entry short and the failed second entry long, and basically just a lower high off the range, that's really all you need there. I like going short there. You should be a little concerned about the room between there and the EMA. So you may drop a limit, let it break lower and drop a limit order in. You probably could have gotten filled. I don't know. But and you probably could be all right just going short there, because like I said, the last couple of times we were testing this low, and we'll probably test it again. And notice how we came up short from going back to the highs. So we're probably going to make another leg down similar to that leg. What you got is you got a leg down right here, and then there's a little two-legged correction there. So you'll look for another leg down, and lo and behold, you get a move, measured move down, and it bounces. So there it is right in front of you. A leg down, two-legged correction, so your second leg should be similar. And then, of course, you come down here and you get a triple test off this low. You test it once, you test it twice. Very nice bullish bar. I like going long right there, just to ride it back to the highs. If this would have been a good signal bar, you could have gone long there, but it's not. So, but this one, and look at it go. And if you catch this, once again, it's a huge runner. I mean, that's 25-point runner that lasted 5 minutes, basically almost 6 minutes. In 6 minutes, you could get 25 points. I remember when the market 25-point move was the whole day. Not very long ago. I mean, when I say that, people probably think, yeah, Mac's 100 years old. No, it wasn't that long ago. Trust me. I'm probably older than I'd like to be, but I'm not that old yet. So anyway, that's a nice move. And if you just rode it up to the first bar that broke lower, you're probably going to get 20 points. So then we drop down. This makes an equal high. I believe it's an equal high here. It looks, there's a couple of spots that look just like that. The high is 848.75. Yeah, it's an equal high. It didn't break higher, or you might have traded this down. You still could maybe enter this if you wanted to try to ride it back to the EMA, because it's probably going there. But we could push up and make a new high, and so without it breaking higher and creating some kind of trap or something, I'm real leery of that one. That's why I didn't mark it. Of course, we come down, we get a close outside, and we tried a couple of times to go lower. I don't think you want to go long here. It's way too congested. It finally does push higher, but I just don't see anything in there that would tempt me. You may look at this as a failure right here. It actually was a failure when it broke higher right here, and you can see it did go higher then. So the smart traders obviously waited on that. But see the new low, you get a first entry, and then you get a second entry, and it didn't go very far at all. And when it breaks higher, so you may trade that right there. I didn't mark it, but you could argue for that one. It's definitely a trap, but it looks so congested there and sideways. I just was really scared of it. So it runs up, we do make a new high, and then you're off to the races down. And now this is almost a perfect looking reversal here. Notice you make your new high, you pull back, you get a first entry, you shoot through the EMA, you pull back on the second entry. Right at the EMA, it turns down. It actually breaks higher and turns down, so you know you got them trapped. You could trade this on the engulfing. That's where the trade, where the failure triggered. If you waited on this bar, then you got this one in between, you're really 2 bars too late, so I don't know if I'd enter it that way. You could, but I think if I didn't enter this on the engulfing, I'd probably skip this. Now, it does pull back again, but you got to go short. And again, it's an engulfing bar, and you got to go short on the engulfing bar right into that low. And there's some more support over here. I'm just not crazy about it. Turns out to be a great move down, 2 more legs down. And you actually get an overshoot, which usually leads to a reversal or a break on this trend line pretty quickly. And guess what? We got one right when it goes straight to the other side. And that's a clue not to try to go short right here. It would have worked even if you did, but in a normal market when the bars are smaller, you'd probably get stopped out here. So pay attention to this overshoot, because it generally means you're going to get a break on the other side, and they'll trap you right here. And then it turns down, and unfortunately you don't get a very good signal bar. You do get a lower high right here. It's pretty close to these lows. There's probably enough room to get out, and you may not care anyway, because we got a pretty good move working lower here. But I marked it green because it's a little bit aggressive. There's some concerns there with that one. If it was a little higher back here, maybe you jump in on it. But with the fact that it's down here near these lows, it's a little bit concerning. We kind of chop on down. I don't see anything I'd be interested in there until finally you work up here and you get a first entry. You actually get a second entry right there, and it fails real quick, but it still makes this double top. And so now you got a double top, and there's actually that's basically a little double bottom there. So you still get a second entry short right here in a big bearish bar, but it's a double top with a little trap where it breaks higher there in a big bearish bar. So I like going short there. And because they probably trapped the longs on this right here, and it runs down real quick. There's a lower high here, but you can't enter down there. Don't enter down there in that double bottom. And then we just kind of chop along, and I don't see anything that you can go short or long on here, really. Just sit tight, and it finally breaks out, pulls back, and gives you this big bullish bar. I like going long there. It's only a first entry, and it's not a failed second entry short or anything. So it's a breakout pullback long, and we've actually had a break and a couple more than a couple of legs down there. So you're looking for prices to maybe reverse. The issue is it's a really big bar, 20 points. I mean, I say really big. It's a big bar, and you don't have a whole lot of room to scalp out there. So that's the concern. If you had a lot more room here, I'd say probably you could argue for it to be blue. Um, Another pullback here, just the first entry, not a good signal bar, and then finally you get a break. And even though this is actually a second entry, uh, this is a new high. I'd call this a double top, but you count that as a new high regardless. So it's a new high, first entry, second entry. It looks a little congested, but that's the first break. It is a second entry. You're probably going to get a scalp. We're probably going to make a new high. You don't know it's going to run way up here, but you figure you'll get a new high. And it looked like we were going to get a nice high or low. Of course, there's not much room back to this little double top, so I don't think I would like that even if you had a better signal bar. But look at it go. It runs up. And now you've had a break, a move to a new high, and then you get a lower high here. And there it is again, those two matching highs that we saw a minute ago. So that's a repeat pattern. And we're way away from the EMA. Big bearish bar. I like going short there. Now, again, you don't know that at the bottom is going to drop out, but you got a lot of room back to the EMA right there. So you got plenty of room to make a nice move right there. There's 3 points. But this thing just keeps going. I mean, all the way to the lows, it's another 15 points. But if you just go to where it broke higher above by following your stop all the way down, well, there's 10 points almost. So another nice move. And I mark this as a possibility. Notice you get a first entry. You're moving down, and you get a second entry there. It's a little iffy. I marked it green because I figured somebody would ask about it, but it just looks like one leg down, so it doesn't look like a failure to me. And it didn't really break higher here because you have the matching high. So I think you could almost call this a failure. So maybe you enter there instead. And I didn't mark it, but again, you could argue for it to be green. I think you're better off just to wait because you can see once you got that breaking new low, this thing rocketed out of there. And at the very least here, you got to be concerned that we're going to make another leg up, and you don't want to get caught on that. So there's and look, we went almost to the tick before we found some resistance and profit taking, but this market wasn't done yet, so continues to go on up. But notice you got a new low there, and you get a first entry, second entry. Did I talk about that one already? I'm confused to where we were now. I think we talked about that trade. And then you make the new low, first entry, second entry, it fails, you get it long, and then you're just kind of chopping sideways, you break out. And notice there's a new low there, so you get a first entry, second entry. So that's a failed second entry short right at a possible, it's at the EMA regardless. And there's a hidden second entry long in there as well. Notice we're up here and we go down, you get a first move up, and then you move down again, and that's the second attempt to go higher. So if you went to a little smaller chart, you would see a true second entry. That's a little more advanced. Don't be trying to do that if you're new. Just stick to the real stuff. If it's not a second entry on the chart you're trading, don't try to think ahead and outthink yourself and cause yourself some problems. But again, you get another rocket up to the measured move, chopping along. It ends up pushing higher. I don't see any way to get long on that. Maybe you look at this as a double bottom and a first entry, second entry, but you got to go long right into that double top, and that's never a good idea. So there's two moves back here, but no setup. High or low, not really a setup. And then you get a failure right here. Notice the new low, first entry, second entry, breaks lower, turns up. You could trade it on the engulfing bar. You could wait and go long up here. Doesn't matter. You get the scalp either way. Now you get a little close outside and a new high, though. That's not real convincing. So no surprise that we made another leg up. You got a convincing close now and another leg up, but really it just looks like a close outside right here and 2 legs up. And you can see that right there. And of course you make the new high, you make a lower high, and then you make a failed second entry long. And you're looking for a reversal anyway. You're way away from the EMA. I like taking that trade. There's a lower high here. I'm not as crazy about that one, but it's another one you could consider. It looks a little congested right there, and you could get trapped. Although there's a little room back down to these lows, so you might trade that. Runs on down, you get your first close outside. Notice that you got this channel working up. You get a close outside, attempted a new high, and it didn't make it. And so you may go short there on the second. That's a second entry short. Notice the new low. You get a first entry, you try to go higher. When it breaks lower, it's a second entry short. And you're looking for a new low, and you're looking for a possible reversal. So maybe there's a bigger pattern going short here. Runs down, makes the new low on the yellow one, and then we just kind of runs into 230 here and just kind of runs sideways before it eventually pushes higher again. And so that's what I saw today. And that's going to wrap up our week. No chart lessons on Fridays, so we're done for the week. We'll be back again Monday. Just trying to think if there's anything else. I think that's it. So there were some good trades today, some easier to see trades with some nice moves. We're still turning and still kind of chopping sideways with some big, strong, volatile moves in both directions. But most all of your channels played out today and gave you a warning, and they played out by the rules. So it was a little bit easier. There were some second entries in there. So today felt like a much smoother and easier day. And again, if you want to consider, and if it's too fast for you, don't be afraid to try to find you a little bigger tick chart. Of course, your trades probably won't match mine, although some of them may still be exactly the same as well. So, but there's nothing wrong with this, because the whole idea behind the 2000 tick chart, again, was to find a bar that lasted about 5 minutes. And that was kind of the sweet, we found that's kind of the sweet spot. People will then say, well, why don't you just use a 5-minute chart? Well, compare a 5-minute chart to a tick chart that's got bars that last about 5 minutes. Even though both bars last about 5 minutes, you'll see so many more details in the price action with the tick chart. So that's why we want to trade a tick chart, because we can see more details in the price action. We're visual chart readers. So in order to do that, we want the right tools, and the right tools will be these tick charts. If you put a 5-minute chart on here, it smooths all this stuff out, and you won't see near the details in the price action. You won't have near the information you got off this chart, and you'll find trading to probably be much harder, and you'll have a lot more failures, a lot more losses. So don't try to go to a 5-minute chart unless that's your only option. This stuff will work on a 5-minute chart, don't get me wrong, but you won't see the same setups, you won't see the same price action, you won't see the same details, and you won't get all the same trades we get. It's like the way I like to describe it, it's like going to a gunfight with a knife. Tick charts your gun, and 5-minute charts your knife. And you're not going to last long in a gunfight carrying a knife only. So you're going to get chopped to pieces. You're going to get cut to pieces. So anyway, I'm not going to beat around the bush and drag this out anymore. I'm going to wrap it up. Hope you had a good trading week. We will be back again Monday, and have a great weekend. I'll see you next week. Don't forget about rollover tomorrow, and definitely by Monday. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next